Welcome to the Daily Block, the top events happening in past day in crypto and why they matter. Strap in, we've got ETFs, Presale Mania, court drama, and yet another Elon-fueled takedown. SEC greenlights generic ETF listing standards, Dogecoin, and more ETFs suddenly easier to list. The SEC just approved generic listing standards that trim months off the exchange approval grind, basically greasing the rails for new spot crypto ETFs. That move immediately cleared the runway for multiple filings, think Dogecoin and multi-crypto products, and even pushed firms like Grayscale to amend S1s for Doge and ETH ETFs. Exchanges can now list a wider range of crypto ETFs without begging for bespoke approvals every time. Why it matters for crypto investing. ETF rails equal instant institutional on-ramps and massive passive flow potential. Any token that becomes ETF eligible can see rapid, outsized liquidity and price moves. Risk counterpoint. This looks great on paper, but actual approvals, index licensing, and provider economics still matter. Just because it's easier doesn't mean every token turns into a liquidity faucet overnight. Moving on to something a little less exciting than chaos, but a lot more consequential. Bitcoin volatility falls below Nasdaq firms as institutions pile in. Bitcoin's realized volatility has cratered and is now lower than almost every Nasdaq 100 company, while ETF inflows and corporate treasuries keep stuffing BTC into their balance sheets. A recent Fed rate cut added macro tailwind, and loud market voices, yes, including Michael Saylor, keep pushing the narrative that Bitcoin is getting boring and more investable. That's a big regime shift, less wild swings, more predictable beta, and bigger pools of institutional cash. Why it matters for crypto investing. Lower volatility plus steady institutional demand increases the odds of sustained inflows and re-ratings, and it changes how traders size risk and dream about leverage. Risk counterpoint. Boring markets can stay boring until they don't. A macro shock or regulatory headline can reintroduce volatility in a hurry. Hot little payment token alert coming up. Remitix presale raises $26 million, pitched as XRP 2.0. PayFi play. Remitix, ticker RTX, just pulled in about $26 million in its presale and sold 666 million plus tokens, touting Certicate checks, a beta wallet, and early centralized exchange listings on Bitmart and L-Bank. The marketing is leaning hard on an XRP-style payments narrative, fast cross-border rails, token incentives, staking, referrals, but priced to lure retail FOMO. Why it matters for crypto investing. Big presale raises combined with product testing and CEX visibility can ignite lightning-fast retail pumps at listing, creating short-term trade opportunities and meme rotations. Risk counterpoint. Presale math and tokenomics often hide dilution, vesting cliffs, and dump mechanics. Early hype frequently meets liquidity floors at listing. Hold your front page alerts. We're still in presale city. Blockchain FX presale blast past 7.6 million. Super app narrative and presale FOMO. Blockchain FX, BFX, is marketing itself as a multi-asset super app, crypto, stocks, forex, and claims millions raised at a current presale price around 0.024. They're dangling staking payouts, staged price jumps, coupon codes like Block30, and giveaways designed to make retail feel like they missed the Yachty party. Early backers argue the confirmed launch price guarantees instant upside, which is exactly how social hype snowballs into frenzied buys. Why it matters for crypto investing. High presale volumes plus promotional mechanics equal rapid retail rotation and potential wild volatility at listing. These plays are hot for pump narratives. Risk counterpoint. Super app promises sound sexy, but execution is hard. Regulatory risk is real for multi-jurisdiction financial offerings, and staged presale pricing often leaves later buyers holding the air. Now, let's get grim for a second. Courtroom paperwork, thrills not included. Wazir X recovery stumbles. Singapore court demands fresh filings in restructuring. Wazir X's attempt to recover from a $230 million plus Lazarus hack has hit another procedural pothole. The Singapore High Court rejected filings and ordered new affidavits and replies, which stalls creditor payouts and any relaunch timeline. The moratorium stays messy. Users don't have tokens in hand, and promised recovery mechanisms are now delayed indefinitely. Why it matters for crypto investing. Exchange solvency and legal risk are major catalysts for localized sell pressure and contagion anxiety. With India's retail base at stake, regional sentiment can flip altcoin flows fast. Risk counterpoint. Legal processes can also unstick eventually and return value, but timelines are long and outcomes uncertain, so don't bank on clean recoveries. Switching to the social layer, yes, Elon made it worse. X exposes massive 2.1 billion crypto bribery and scam network. Crackdown underway. X reported a bribery ring that paid employees to reinstate suspended scam crypto accounts, with links to phishing and ransomware gangs. Platform takedowns are accelerating after revealing what they say amount to systemic abuse. Scam losses in the first half of 2025 blew past billions, and this kerfuffle has already triggered legal action and law enforcement engagement. Why it matters for crypto investing. Social media manipulation and account takeovers are the primary engines of pump and dump and rug scams. Cleaning up those vectors changes how retail finds and chases tokens, and the viral catalysts that drove past pumps may be less reliable. Risk counterpoint. Enforcement can shrink scam channels, but scammers adapt fast. Expect noisy period of fewer viral hits, but more targeted, creative fraud attempts. Keep your custodian radar on. This is structural. BitGo files S1 for US IPO. First major crypto custodian going to the New York Stock Exchange. BitGo filed for an IPO under ticker BTGIU, reporting custody growth to about 90 billion in assets under management and solid revenue expansion, with Goldman Sachs and Citi leading the underwriting. A public custodian means more institutional legitimacy and a visible benchmark for custody economics and compliance. Why it matters for crypto investing. A public custodian IPO boosts institutional confidence and likely funnels more capital into regulated crypto products and ETFs. It's a sign the plumbing is maturing. Risk counterpoint. IPOs invite public scrutiny and quarterly pressures. If crypto markets cool, custodians' multiples can compress quickly and reveal margin sensitivities. Last hype wave before we wrap. Ozak AI pre-sale hype. 3.3 million raised. AI plus crypto narrative fueling retail mania. Ozak AI claims about 3.3 million raised at a roughly 0.012 stage, promising predictive trading tools, Pyth feed integration, and an audacious target $1 listing price in promo materials. The project is getting heavy push across channels and is playing the hot AI plus crypto meme card to stoke FOMO. Why it matters for crypto investing. AI plus crypto is a classic Reddit pump combo. Pre-sale narratives like this are prime meme material and can deliver swift, painful moves on listing. Risk counterpoint. Promised tech integrations and lofty listing targets are marketing staples. Without on-chain proof and audited tokenomics, these plays often end up with execution risk and early dumps. Alright, that's the 8 big ones. If you like the sizzle and want the meat, hit subscribe so you don't miss the follow-ups, on-chain flow calls, and the inevitable panic moments. That's today in crypto, where the gains are imaginary and the pain is real.